There was a massive shift in the US stock market. The market gapped down this week and finally recovered as expected, because in the last week we discussed that the market is trading quite in proximity of the support zone. So S&P 500 recovered, Nasdaq 100 recovered, and Dow Jones Industrial Average recovered. If we check the market sentiments, fear and greed index with respect to S&P 500 on closing of the last week reads at 24. So it is in a extreme fear zone. It has traversed down from fear zone to extreme fear zone. So by and large, this indicates, being an oscillator, that probably market is likely to move higher, because this particular indicator moves from extreme fear to fear neutral, then greed zone to extreme greed zone. Similarly, if you look at the market momentum, it went below simple moving average. S&P 500 went below simple moving average 125 period, then recovered to close above simple moving average 125 period. So this indicator is also indicating the sentiments is fearful in the US stock market. Similarly, if you check the option data with respect to S&P 500 option contracts, the put call ratio 5 days average stands at 0.91. So this is also indicating that the market is extremely fearful. So in this video, we will undertake comprehensive technical analysis of S&P 500, Nasdaq 100, and Dow Jones Industrial Average Index to determine the support and resistance area, because stock market is all about finding the support and resistance area that enables you to trade effectively in the stock market from support to resistance area if the market is trending up. And if the market is trending down, then you trade from resistance to support. Since the current market is trending up, despite of the vertical correction recently, the trend remained intact, and hence the probability of market going up is more than the market falling below the recent low it has made. So there is a possibility of only long trade opportunity in the US stock market. So friends, don't forget to like this video, subscribe the channel, hit the notification bell for updates. Let's straight away move to the price chart to do technical analysis. This is the weekly price chart of S&P 500 index. The index in the last week closed finally at 5,344.15, and thereby it was flat over the week. Now what we can see, there was a continuous fall in the market. The market in the last week gapped down and then finally recovered. There was a serious recovery and the bull dominated during the recovery process, and finally S&P 500 closed above EMA 21. So EMA 21 during this correction also respected. It was a very important price action where EMA 21 acted as a dynamic support. So this is a very positive sign of the market. Prior impulsive wave is bullish. So this is being a healthy correction. Market almost retraced to 78.6% retracement level, which is a derivative of the golden ratio. Now, if you see the price action very closely, let me first tell you the retracement level. So I am measuring the retracement level in the recent fall. What we can see, the market has effortlessly closed above 38.2% retracement level, which is a derivative of the golden ratio. And hence, next resistance would be at 61.8% retracement level, which is at 5,465, and 78.6% retracement level falls at something around 5,560 level. So this becomes the immediate supply area in S&P 500 index. So considering the support area, can we see the price rejection, price support, and the price recovered very smartly in the last week. So this zone becomes the support area and demand area in immediate terms from 5,250 to 5,277. Let us go to the daily price chart to further discuss the price action. Look at this trend line. This is a very important trend line because it has a touch points, multiple touch points. Prices taken support here, taken support here, taken support here, and there was a support here, which there was a gap down opening and the market fell. However, it formed the inverted ice cream bar quite in proximity of simple moving average 144 period. So there was a decisive recovery in the market. Now this trend line, which was acting as a support, will act as a resistance, and currently the price is trading exactly at this trend line, which is a resistance area. It is quite obvious with this consolidation area that this area will act as a resistance and upside move. At the same time, there is an existence of a gap over here. So immediate resistance is 5,375 to 5,411. Because of this gap, it will prove to be a important resistance area, and there is an intervention of EMA 21 and EMA 55 in this zone. Once this zone is taken out, then there is a retracement level called golden ratio, 61.8%. This will act as a resistance. So in coming week, finally we conclude that the major resistance area is 5,411 to 5,489, where there is a multiple consolidation level. On downside, we have already discussed the support area. Now, considering the wave formation in the market, this is the complex correction which has taken place. Although this is not a typical ABCD pattern, this is A, this is B, this is C. So this is an extended ABCD pattern where the price extends to 161.8% expansion level. So this correction seems to be over, considering this as a complex correction. Now let us move to the price chart of Nasdaq 100 to check out the price action, determine the support and resistance level. This is the weekly chart of Nasdaq 100. Now what we can see, this index has closed at 18,513.1, and so it was marginally bullish by 0.39%. The most important part here is that it defended EMA 55. Earlier also it defended EMA 55 during this correction. During this correction also, it went below EMA 21. So finally what we see, that price comes to, during correction, in a zone between EMA 21 and EMA 55, and from where it recovers. So it was also a gap down opening, and consistent buying has come in this price action, which indicates that the bulls dominated after a gap down opening. Now, considering the further price action on Nasdaq 100, can we see here, this was the area of resistance. There was a breakout and there was a support. So this was the breakout of the symmetrical triangle over here, which finally culminated into a breakout of a rounding pattern. So if we calculate the target on the basis of symmetrical triangle formation, it has already attained the first target and now correction started, which was quite obvious and expected to. So now on recovery, the next possible target could be to somewhere around 21,700 and then 23,000 in a short-term horizon. I mean, in near future. However, if we calculate the long-term target, we should take the view on the basis of rounding pattern formation. And if I calculate the target on the basis of this, the target comes at 21,700. Then it has a potential to go up to 25,600 level. So overall trend is bullish. Let us go to the daily price chart. What we can see in daily price chart, similar kind of price action can be seen, what we talked about in S&P 500. This was the complex correction. We call it as a ABCD pattern. And now there was a gap down opening and price took support on SMA 200, respected this consolidation band, and there is a smart recovery. And finally, the price closed above SMA 144 level and took out this important resistance area. See the multiple price rejection, and support over here. So price has taken out the immediate resistance of 18,300. So based on the price action, now this should become the immediate demand. That is 18,150 to 18,300 based on the price action becomes the immediate demand area in Nasdaq 100. However, the major support lies at 17,700 where there was a resistance, and this happens to be nearly median of this bullish candlestick pattern, and this is the median with a confluence of SMA 200 represented by this yellow color. On upside move, there is an existence of a gap. The gap exists over here. So 18,629 to 18,737. This was the resistance, this was the support, is likely to be the immediate supply area. But the major supply area exists here. Price has taken support here, and then on pullback, price got rejected over here. So 19,500 is the next major resistance. However, this gap will also provide the resistance on upside move of this particular index. Now, here, if we do the retracement analysis of the last corrective wave, price has taken out 38.2% retracement level and now is approaching towards 61.8% retracement level, which is likely to act as a resistance because it coincides with the gap that we have discussed over here. And then next resistance could be 19,101 based on the retracement analysis, because there is a multiple support and there is a confluence of EMA 21, volume weighted moving average, and EMA 55. So this is all about the price action in Nasdaq 100. Let us move to the Dow Jones Industrial Average Index. So let us first go to the weekly price chart. Now what we can see in weekly price chart, earlier it has made this rounding pattern, breakout was there, and it attained the first target based on this rounding bottom pattern, that is 61.8% expansion level. So the next target on intermediate terms could be to 43,700 to 43,800. Now here look at the price action. It has taken a support here, taken a support here, taken a support here, taken a support here. So this trend line is acting as a dynamic support, and the market structure is higher lows, which indicates the bulls are still in control. Here too, last week it closed at 39,497.55, and hence it was bearish by 0.6%. But here too there was a gap down opening and price recovered. A smart recovery was there. And finally it closed above EMA 21, which is very, very important. So now let us go to the daily price chart. What we can see, the price is facing some resistance at EMA 50. And this happens to be the area of resistance. So there is a minor resistance over here. But the next major resistance could come here where the price has taken so 39,850 to then this level 40,100, and there is an intervention of EMA 21 here also before this zone. So this is the supply zone immediately, and then next area of resistance would be 40,600, which happens to be the median of this bearish candle. Overall structure in all the three indices are bullish. There has been a vertical correction in the market, but the trend remained intact and market is still in uptrend by all definitions. So what do you think, friends, whether the market in the coming week will respect these important zones that we have discussed with respect to the demand and supply zones? I'll be waiting for your comments in the comment section. Thank you very much for watching. Looking forward to meet you very, very soon.
Willing to succeed in the stock market? Join DK's Diamond Club channel membership for fundamental and technical analysis. Learn strategies and risk management to stay ahead of the curve. Join now and attend our weekly meetings every Sunday.